Hello everyone, today is October 22nd and this is our session number 7 of the Wyckoff Trading Practicum course. Today we're going to do some of the different exercises. Um, the main exercise is going to be on selection, and then we're definitely going to go through the volume price analysis. And then our usual segments are going to be the bias game. That one is going really well. Anatomy of the trade, we need some kind of decision. So it's almost like, in real life, what do you do? All right. Are you staying with that stock? Are you going to another one? So we'll talk about this. FAQs, not FAQs, oh my gosh. Q&As throughout the whole presentation. I think that we have a couple of people with questions. Market update, that one will be really quick. Then we'll talk about position sizing. This is something that I want to revisit if we haven't done so in the WTC cycle before. If we did, I know there are always questions about that, so just get ready for that, and then we'll do the exercise. Next session, October 29th. What else in the announcements? We still are going strong with the October special. So for those of you who are signed up, I'm sure that you appreciated the second session, which was really great. John took us on a much deeper look into the how do we create how do we recognize the conditions for the scan, how do we recognize the events, how do we combine those. And session number 3 is going to be very interesting. So this is an appropriate level for this material, this class. So I would definitely suggest this special. And you can sign up and just instantly have an access to those first 2 sessions. And then once the third one is done, it will be delivered on demand. All right, as usual, everything what we talked about here is for educational purposes. Let's jump into the bias game. I did not like this chart. I don't know, just the way how it looks is just something about this. Maybe it's just the visual, maybe it's the structure, but it doesn't really matter. A bias game is a bias game, so you only have one stock to trade. We are in the current uptrend, and I've seen some kind of changes of character. Those changes of character come on expanding spread. Before that, we only could observe, expanding spread probably right here. That was like the largest one. And even that is already an early indication of what's going on. And if we would start even our early observations, this is the largest spread on the way up. And it happens on kind of mediocre uh, volume. So it's somewhat slightly above average. So we would probably be thinking that this uh, not strong supply signature would suggest a preliminary supply, one way or another, whether this is a reaccumulation or a distribution. All right, so then these bar comes and these bar comes, and they seem to be a part of the same structure, like right here. Another structure that I'm seeing is just this whole thing. And then I'm thinking, what if this acts as a reaccumulation or just like the last push? Now, I'm not really fond of the idea of the reaccumulation here so close to, let's say, a buy-in climax, right? Why? Well, because we have some kind of causality which suggests that there is some accumulation throughout this range to push the price up, which is obviously not true. We are just barely getting above the resistance by $2 and then coming back. So I think it's just a preliminary action or even actions. And you could most definitely consider this reaction right here that has this 1, 2, 3, A, B, C type of pattern you can consider this a change of character. And then, as we labeled before, preliminary supply, there is a little bit of the climactic run here, so let's just tentatively put it like this. And then here is your range. Here is your support. That includes the majority of the price, maybe only in this area right here that we don't have it. And that would suggest that either this a secondary test, or we have maybe like this, a phase A. Again, alternatively, you could do this, and then you're thinking that this is a buying climax, more defined climactic run, I would say, much better. So this whole area then is just preliminary supply. And here we would be thinking, okay, well, how would we label this? Multiple tests here, not sure. Phase A would be, this is one structure right here, this is one structure, this is one structure, another structure. So probably would still go with their original trading range like this. All right, well, let's look at the change of character. Definitely comes with the expansion of the volume signature that suggests different things. Looking at the volume increase in general, suggesting supply is increasing, environment is changing into a trading range, which we are going after that. We're also seeing how there is an increase in selling each time on the way down. So we would be thinking that this low should be retested. This retest is in line with an idea of the trading range, so we will be expecting a retest in the near future. Why is this important? Think about the strategies. You are in this position, what do you do? You're not in this position, would you be even looking at this stock at this point of time? One might say, well, I really would like to trade this type of rally right here, except for maybe volume itself and how the price moves here so quickly, you probably will not be able to find this momentum right away. This is a very short-term trade. You have to intraday trade that if you can find that and be in it at this specific point of time. That's great. But for the majority of us, we probably would be thinking there is nothing here for us. It's going to be a trading range. How does the trading range unfold? Well, as we've had the bias to the upside, the change of character is not that pronounced. I mean, it really just reacts into the area of the previous support. So I'd say that the bias on the change of character is reaccumulation based on how the price behaves. And then when we look at the supply signature, and there is some demand behind this bar right here, there is some demand behind this bar right here, those big bars. Somebody's buying right there, and that stops the price from moving further down. And please note how this reaction is a little bit interesting. It gives you a little bit of a clue, that nuance that, you know, if demand has come on this bar, on this red bar, if supply is still strong, we most likely are not going to have a very strong reaction. But this one actually commits above the high of the bar and then stays there. So there is some strength in the demand that's coming in on these bars. So kind of more of the reaccumulation. This one also has some demand signature behind it, and then again, some absorption of the supply as this demand comes in, lots of demand, lots of demand, lots of demand that creates that momentum. So we would see like on the momentum indicators, especially short term, are going to go up. On the longer term, momentum indicators, we're probably going to see something like this, and then acceleration. So it's going to show us elements of buying, and therefore our mode is still going to be, our bias is still going to be a reaccumulation at this point. When the price comes to this level and we are thinking this is an upthrust, I think in a lot of people's minds, upthrust is associated with a bearish condition. And rightfully so, because at the short-term juncture of this price structure, we usually in the upthrust action are not going to spend a lot of time above the resistance. We usually just temporarily commit, and the whole definition for the upthrust is a temporary commitment above. So here we would be saying upthrust trading range. We want to recognize this structure right here. So the way how this upthrust unfolds, and I'm going to erase all of this, is very interesting. It's just because of the fact of how many closes we have here to the upside and how many times we have progressive closes up within the idea of the time being spent above the resistance. And think about what it means, right? The price is not reacting in the upthrust manner when it just commits with one bar, with one close, and then goes down. It doesn't commit with one bar and then multiple attempts to rally failures and goes down. No, it actually spends a lot of time here. So this means that there is no selling. Or if there is some, then that selling is being observed really quickly. And we kind of see it through the structure that there is some selling that comes in right here, and yet everything is being observed. My argument here would be that these buyers right here that operated in these areas, they're supporting now the stock at the slightly higher level, which is a really good sign. That support suggests that the price is going to stay at this level of resistance and then it will try to get out. All right, so we have support at the higher level. Now, unfortunately, the buyers here are done. And then when the buying is done and buyers become inactive, what happens? Price starts to deteriorate, starting to create lower highs and lower lows. And then with this type of structure, if the price consistently does this, grinds down into the trading range, then we're going to have some kind of capitulation. So let's kind of come back to where we are in the bias. Let me remind you, right? We're developing that Wyckoff story. We were in the uptrend, then we thought that we're in the reaccumulation. Looking at how the price has spent so much time above the resistance, we're thinking reaccumulation up to this point right here. And then right here, we are starting to think that demand is exhausted. And we can't say that it's a poor demand because when we look at the volume signature off the bottom through the whole rally, and then we look at this period of absorption and the potential backing up action, we're thinking that there is a lot of demand. And it's a strong demand, it's active demand, it's one of the highest demands on the chart. So it's not that demand is poor. It's probably more that the demand is exhausted at this point. And if there would be some selling into that demand, we probably would see how the price go down with more selling. And yet the volume here is inactive. But we're still expecting some kind of capitulation. We also said that there was some supply here, so there is a retest expectation of the low of the automatic reaction here. And we have that, and we probably having the best case scenario where acceleration starts to happen and not a lot of volume signature comes in relative to what we've seen before. And then on the actual test, everything goes into the demand on this daily bar. It's the overnight action that brought us here. So, but from the perspective of the bar itself, we opened, tried to go down, and then closed above the previous day's close. So this is a very bullish bar. So again, demand, as it was strong in this value zone, it is strong again. And we are expecting some kind of better rally. What we had. We have really good spread, but yet look at the spread itself. Momentum diminishes, there is less progression of the stride to the upside, and then as we do so, demand is diminishing again. So we're still thinking that from the reaccumulation idea to this reaccumulation support idea, and then into this weakness, our expectation was that we're going to find some kind of support just because of how buying has happened previously. We do see that, so that still confirms a reaccumulation for us. Now we want to see that sign of strength rally, or maybe a rally in phase B that would have like, good characteristics, but fails. It looks something like this. I'm actually surprised even how it looks. I would be thinking that almost like this is a structure for phase C, because the way how the price travels off the low reminds me of the ways how the price sprints and then goes into the sign of strength rally, where you see a lot of sign of strength bars, and those are definitely looking like sign of strength bars. Well, maybe the market or something else. So we're taken down after the just slight diminishing momentum characteristics. And as we go down, the key here is just to see again, what are we going to do? Are we going to expand the progress to the downside, or are we going to exhibit some bullish characteristics? And as we look at the diminishing spread characteristics, like this bar right here, and we are comparing it maybe to this one, then we are comparing how the gap happens, and yet on the second reaction, we have just two bars that are much smaller than, these bars here or this one bar right here. And that tells us that probably selling is getting exhausted. We want to maybe check locally the same picture. So this looks like demand that is coming in. This was increased selling, and now we are going maybe like this. The selling bar was kind of on the same level. And it looks actually maybe even worse than the first one. I mean, if I would be comparing these two, I would be thinking about the true range for this bar. Here it is. And on the same type of effort, it produces maybe a little bit better movement, closes lower. It's only these two bars really, or the collection of these bars, 5 bars, are giving us that pause, that indication that absorption is happening. If we do the VSA here really quickly, let's look at this bar. Yeah, this bar right here has some kind of demand behind it because we had so much progress to the downside, and then we have a diminishing spread on increased effort. So effort is increasing, and yet result to the downside is decreasing. That's bullish. That suggests demand presence. So then the next bar has this demand tail, and the volume is still high. So even though effort went down, result improved, to the upside, and definitely is less to the downside. So less effort, less selling, and less result to the downside. Still bullish. And then these three bars are showing us that demand is coming in, supply is coming in on both of these bars, and yet every time we recover back. So bullish suggests a rally, and right here, just because of how these two tests have happened, we're still in the reaccumulation bias. And as the rally unfolds, there is a little bit better sustainability of the swing. What do I mean by that? When the price travels, reactions are not that deep. Look at the intraday reactions, right here. Compared to this is a little bit more volatile. So therefore, you're thinking if volatility has gone away from the upswing, then we have more controllable supply, or rather demand, very strong demand that can control the supply. Otherwise, the structure would be different. And then that leads us, this low supply environment leads us to the rally that actually commits above the previous high, and then the price stays up and the volume signature goes down. So it's almost like we had supply diminishing on the way up, and then the volume actually goes down even lower. So supply goes lower. So throughout this whole picture, we still end up in the reaccumulation bias. So let's see. Okay, let's look at this first. Let's look at the solution. So this was the industrial ETF XLI. Twitter guessed it correctly, analyzed it correctly. Good number of votes right there. Let's look at the labeling here. I would put probably phase C, and by the way, it's not like, this is not the labeling that I haven't checked or I haven't put myself here. We have a whole team who works on the bias game because we're tweeting it out. So I'm acting kind of like in the middle of this process where whatever, knowledge comes to me, I definitely put it in the way how I would label it myself. So therefore, thinking about this a little bit more, I think the thinking here was this is a phase C relative to this climactic action. So we have like this structure here. So we have a C within C. You can think about it this way. And then obviously here, as the price moves on diminishing supply characteristics, we are recognizing elements of the sign of strength rally. And then we probably could have said that this was a minor sign of strength just because we overcame this high. And then this would be a minor backing up action, or LPS, last point of support. And we would be expecting a commitment above this area right here, which comes here. And note again how the price hangs up over that resistance that was created by the upthrust action. It's just there is no selling. If there would be selling, we would almost instantly have some kind of reaction back into the trading range. And yet we don't see this. So this is a really good sign. And then as it comes back into the resistance cluster, still no volume signature. So we're expecting a final breakout with a lot of acceleration, and a lot of shorts are going to give up. They're going to cover, and that's going to propel that bar as well. Question here. I thought the buying climax usually was accompanied by an increase in volume, or is a buying climax wherever price holds its up move and moves into a trading range? It's actually both, Simon. Conventionally, we were taught that either climactic action will have a climactic volume signature behind it. So now, obviously, knowing that this is not necessarily just one way, there are multiple variations of how climactic action could occur. But one of the most important things which you actually said in your question is the stop in action itself. And we could see that stop in action with different characteristics, but the most important characteristic for us is still going to be a change of behavior where something is different, where the uptrend might be broken, where the volume starts to increase, where the spread increases, where the distance of the reaction increases. It's just different. And you see that selling has come in. Somebody's selling, and it doesn't necessarily mean that this is the actual top, but it means that from now on, we could expect a different environment. So let's come back to the question of the volume on the buying climax. As I said, that this looks a little bit more like a true buying climax because you have that climactic run, you have that acceleration in the spread, you have the acceleration also in the volume signature a little bit backwards, but it still gives you a lot of momentum to the upside. That's what you want to see in that last climactic run. For stocks, in a lot of cases, you're just going to observe the actual stop in action that initiates the whole trading range. There are no other points here that initiated this trading range, but actually this one right here. And it's out of this point that we started the change of character. It's before this point that we had a prelude to the change of character in the preliminary supply. So it makes a lot of sense also that the subsequent test comes to the area of the resistance of the same point. So as you see in this case, there is nothing on the volume here that we could say, oh, this is so climactic. And that's what it is. That's kind of like that main variation where you're going to go into the stop in action and your volume signature is going to be either declining or be average or below average. Well, think about the logic of market participants and how they're thinking about this spot. Whoever they are, let's say that we are looking at the institutional trend followers and we are looking, let's say, maybe at retail traders. How are they looking at this situation? And what are they doing? In the uptrend, would they be giving up their positions? Well, ITFs definitely would not be giving up their positions. Why? Because the trend has not changed. So by their definition, the price is still bringing them the absolute return. There is a relative outperformance. I'm just looking at the price really quickly. Maybe, although maybe not. I'm looking at the 2014 October. Yeah, so this was that October big move to in the markets. So this particular instrument might be underperforming at that time, but on the absolute basis, still bringing the money. So they would not depart from this position until they're going to see signs of deterioration. I think that in a way, this is where ITFs, some of them, are going to give up this position because this shows change from the trend, and they would be willing to get out of this position or just scale out, and they're probably scaling out at this point. And then the retail trader is going to have the same mentality. As long as it makes me money, I'm going to keep it. And usually in the late portion of the cycle, later on, retail traders are going to make money. That's where they are making money, and that's what's keeping them in the game, because once they experience that, they want to come back. So they would be holding on to their positions as well. So therefore, there is no big exchange of shares at this point on the climactic action, on the stopping action itself, because CO is mostly inactive. CO is holding this position in anticipation that the price will continue up from here as we go through the trading range. So no shares of supply is being presented from the CO, and ITFs and retail traders are also not giving out their shares. So therefore, a stop in action without any climactic volume signature, just on the pure diminished momentum itself. We could see this from the spread, right? So look at how it goes. There's momentum almost in each of the rallies. And then here, momentum is probably on this rally right here, and then starts to vanish a little bit more at the end. So we kind of see how the price decelerates in its ascent. And it happens also on the diminishing volume characteristics. So we're assuming that this is probably an exhaustion of the demand, and we could have some kind of reaction. Where would it go? Probably into the area of where before, there was more dynamic rise, there was some demand, there was some push to the upside, so somewhere here into this area, and that's exactly where the price came. For stocks, it's like this. For illiquid stocks, you're going to see those big spikes, and buying climaxes are going to be easily identified with the climactic volume signature. For immature markets, you're going to see a lot of that. For instance, when you look at the Chinese market, a lot of the stocks are having that type of behavior where they have climactic runs, hypodermic runs, and then urgent selling. And that produces that huge climax with all of the correct attributes. But in the markets like the US market, where institutions are holding the stocks for a prolonged period of time, those reaccumulation areas, especially phases A and early B, might have some volatility, but not going to have a huge volatility. And it just all depends on the rotation. So in this case, we're just kind of seeing that. So we just have to go by what? We have to go by the confirmation of the buying climax, which is a change of character itself. And I would say that this is very easy because the change of character is very easily identifiable structural element. All right, let's come back to this slide. And this is from Simon. And I just wanted to comment and commend Simon on such a great job here. He was going through this bar by bar, swing by swing, segment by segment. So it's just great to see this type of work. I just wanted to acknowledge this. And several questions, so let's go through those. Would this be considered a distributional pattern? If so, what characteristics would identify this? Segment 2, this one right here. I actually had a comment from one of you, which I thought was very fascinating and kind of right on the money in terms of the structure. I forgot the name, just tell me if you know who that was, where we have the analogous structure of double bottom and then the rally after that. Fractal nature of this pattern with the lower low, lower low, and kind of similar characteristics to the downside. Acceleration to the closer to the end, acceleration closer to the end, acceleration closer to the end, acceleration closer to the end, and then the recovery. So that was very interesting, and we'll come back maybe just for a second to this. Could we consider this a distributional pattern? I would say that this is definitely producing an interesting thought for us, this bar right here. And we're thinking this sellers coming to the market. So then we would be looking for any type of signs where selling would occur. We see some selling here, but it's easily being observed. And then probably the next time it's just on this bar. So if we would be thinking in terms of the distribution or how distribution, short-term distribution is unfolding, I would probably be thinking that after this absorption, this would be the distributional pattern here. So we would be looking maybe at this as a causality, if you're thinking about this, Simon, and then with the effect to the downside to the low of this trading range. So that's how I would look at that. But definitely, in terms of the smaller structure, you could say that this was a distributional top, this was a redistributional top, and then let's say this formation was a distribution with the sign of weakness in the middle. All right, second question, would this be considered a selling climax? So this is the question that we are just covered in the WTC, and for some reason it produces a little bit of the hesitation on the knowledge part as to how would we label this. I think that we have to look at the extent of the reaction, which we said that comes to the lower point of the previous support, but it doesn't go below it. It doesn't commit below. So there is no distributional qualities on the price level, with this reaction. So therefore, we would probably be thinking either of the conventional labeling, in this case, automatic reaction, or we could say that maybe there are some shakeout characteristics here. Could we label this as like a shakeout sell-in climax? In that case, there might be a possibility for us to label it like this. But it seems like even with the absorption characteristics that we have here, a secondary test actually that is being obviously followed by the automatic reaction and the buy-in climax kind of work out really nicely. Also, it gives us a little bit of the room for phase B to develop if we want to extend our phase C. So then phase B is larger than A and larger than C, and that makes a lot of sense. Okay, and then the last question. If you were a swing trader, at what point would you initiate a short trade after a strong rally on the highest volume in September? Right here, Simon? Or here? 1 or 2? Denoted as RA9. Oh, okay. Where is it? RA9. Okay, right here. At what point would you initiate a short trade after a strong rally Okay. Would it be 1 after a significant bar on the downside? Be 12. Okay, great. That breaks below the LCU. What is this? What is LCU? Not on this chart, Simon? Oh, really? Oh, okay. I'm sorry. This is the wrong slide. All right, well, let's come back to it. But, you know, as I'm reading this question, it kind of makes sense to talk about this. Okay, so how about this? I'm going to ask you guys a question as Simon is asking this question here. Thinking about this rally right here and thinking that we've just experienced buying climax, automatic reaction, and now we went into, let's say, a secondary test. Thank you, Simon. Where would we short this stock with an idea that we are short-term traders? We are oscillator traders, meaning that our trades oscillate between support and resistance, and we trade only trading ranges. That's the task, right? So then thinking about where we are in terms of the structure, we are in phase B now at upthrust action. Our goal is to understand a point of entry. How would you describe a point of entry? What would you expect the point of entry to be? What kind of characteristics? Simon is saying it's this chart actually. Yeah, it makes sense that the question made sense, yeah. So, but let's just go with this idea. Looking at this picture, guys, write it down. Looking at this picture and thinking about the secondary test here in yellow. And who are we? We are a short-term trader. We are an oscillating trader, and we trade in only trading range structures. We don't trade uptrends or downtrends. We only trade trading ranges. We know within the structure that we are in phase B at the upthrust action. We know that the next move is going to be to the downside. This is how the trading range would unfold, right? So we're going to have those oscillations. And we know the structure from Wyckoff. So what are the characteristics that we need to see in order for us to initiate the position? And then tell me exactly which bar that would be. Rick is saying we want to see a supply signature. Yeah, so supply increase, right? Eric is saying you would short on the break below the buying climax level. All right, great. So we're looking at this level right here. Simon is saying increase in supply at the top of the trading range. Okay, but what is the context here, guys? I mean, like, if we are short traders here, and this is the stock that we are trading, then what is the context for the short trade? I mean, obviously, the structural context is going to be that we would be expecting some kind of test and reaction into the support area, just structurally. Okay, but what other context we have, let's say, on the bias? The bias before this point is what? We're still in the uptrend. Yeah, we're still here uptrend and then reaccumulation, and then look at the rally. So strong. If this is a strong rally, then we don't want to short right away. And that's my point here, Simon, because you're asking about this bar right here, right? B15. This is not a good bar to short. I've done this so many times, and so many times I was right on the bias, but I was wrong on the timing just because of the strength of this rally. There is just so much that is going on this rally, so much momentum, there is a lot of buying. So what you want to do is you want to have some kind of test and see how the test behaves. And then you want to see how after the test, supply comes back into the market. So let me just kind of see, okay, we want a short time above the buying climax on the upthrust action over near R13. Okay, well, we'll definitely get to that. So we are waiting after this bar. We are waiting for the test. Test comes here. Still, I see a lot of momentum in these two bars. I mean, obviously in the first one, yeah, off the low. So that just suggests to me that it's still too early for the short position. So I'm gonna wait for another retest. But before, we need to retest the support. If support is gonna be broken, and let's say we have a low, I know that because of this momentum, there's going to be some kind of attempt to repeat to rally. And that would be my point of entry right here, because I know that after such low, most likely we're going to go lower. We're going higher again, and this looks like an upthrust. So at this point, this is interesting, and I'm thinking, okay, we having a lot of excitement here, we having a lot of excitement here. Upthrust, could it be potential phase C in the structure? That would make sense. I know that the next bias is going to be to the downside if I'm thinking that this is a trading range. So upthrust at the point of the resistance in the smaller structure makes a lot of sense. Therefore, my first entry would be on this bar right here. This bar comes back into the trading range, closes below the low of the upthrust bar, and suggests that this was the highest point. This was the highest high. Now I want to understand how the price moves, right? Well, first of all, our bar point of entry does not have a lot of selling on it, so not that great. Then the price moves down. We have this bar right here, and it commands this level of volume signature. So there is some increase, but not a lot of commitment to the downside. Everything else is within the body of that bar. So we kind of see how selling was exhausted. So we would not be entering this position or adding to this position until we see a confirmation of the continuation and maybe supply comes back. Where is that? Okay, let's find that. So this was our first bar, first point of entry. And then the second one, all right, let's look. Should be these two bars. Somewhere we see that increase. So structurally we are trying to overcome the high, again in the upthrust type of manner, like we did here. And then the price comes back really quickly into that smaller range that we have here. And it does on a slightly increasing supply signature. So again, not the strongest signal, and we kind of know why, because there is inactivity by the big interest here in this area. Okay, so then the next one would be somewhere on the breakout. We could do that. And then probably from there, we're just going to stop and just wait until the price hits our support level. So that's how we most likely would do the short here. Think about the context, and then think about after such rally with momentum, what kind of testing we're going to have. You know, a very, very common mistake. I've done so many of those. And the most irritating part of this trade, especially if you trade options is that time goes away, it eats up your premium, and then when you close out the position, let's say with even either a small win or close to break even, a small loss, then the price really collapses. And you have to close it because your options is close to the expiration, or the premium collapse is just accelerating. Okay, so did we do that? Simon, what other questions do we have here on this chart? When we're testing, are we just looking at the swing high or its volume, or are we also taking into consideration the rally strength? I was talking more about the strength, but we've talked about this volume as well. It's the consistency of this volume, and specifically, you know, these 2 bars or 3 bars at the bottom that have a lot of demand signature. So you could definitely use volume characteristics also to confirm that demand is very strong, and then just think about what kind of short trade you can have. That's a very interesting non-practical exercise, because obviously we would never be thinking about shorting this particular stock or ETF at that point of time. There are some other stocks that would be much weaker and more interesting. All right, great. Let's jump to the next segment. What else is here on this? Oh, the next bias game. What do you guys think? Let's kind of have a vote right now. What do you guys think right now the bias is? Have a look. Hear what your mind is saying to you. That usually is going to be like your past is talking to you. All of the structures that you've seen like this, that you acted before in the same way, so that's going to reflect the structure. I'm sorry, that's going to reflect your answer. Okay, we'll give you 5 more seconds. And obviously I'm not going to reveal the answer today. That's going to be for next week. All right, so we have quite a few answers, and wow, we have anonymously, we've decided that this is accumulation or reaccumulation in this case. Okay, great. Wow, so the whole class is just like one decision. Usually, I'm surprised not with the bias. I'm surprised more with how our bias here is so non-diverse. Usually, we would have like at least 1 or 2 people who, but this is like 100% interesting. Okay, well, exciting. Let's see next week how that's gonna unfold, and you could go into your analysis, send me that, and then if you unwilling to wait until next Tuesday, you could always check out this game on our Twitter. The solution slide comes out on Friday. And by the way, guys, I really appreciate that some of you would send me emails stating that I know what the answer is because I'm following you on Twitter, and I looked it up. But I did this analysis before I looked it up, and I was wrong, and I want to acknowledge that. And I see my mistakes here, here, and here. These are the best emails that I could possibly receive from you. We will make mistakes. I make mistakes in the markets on a consistent basis, I would say. Just because there are so many mistakes that you could possibly have, whether this is in the analysis, execution, in the post-analysis, in the process, in the mental picture, and so on and so forth. So we still repeat our mistakes even in winning trades where we are not optimizing the trade and so on and so forth. So We just have to repeat this over and over and over and get rid of our mistakes. Bias game is one of those games that allows you to eliminate some of those mistakes. By the way, I was thinking a lot about the way of how we actually construct the bias. We've talked about this, but could you guys remind me and write this down, please? How would you approach the definition of the bias? I mean, like structurally, what would you look at when you look at the chart? Would you look at the swing analysis? Would you look at the bar analysis? Would you look at the volume analysis? How would you combine all those step by step? What would be the first thing that you would look at? What do you guys think? What would be the first thing that you would consider observing for the definition of the bias? What is it, one first thing that you usually would look at? Rami is saying background. Okay, background meaning what, Rami? Simon is saying swing analysis, look for the supply bars and associated volume. Eric is saying the run up and or trend leading into the trading range. Okay, great. Okay, Rami is saying trend, pre-existing, the background, context, right? So yes. So we would definitely, yeah, we kind of going, the Wyckoff story unfolds from the right to the left. We need to establish the context that we're going to use in the discussion of the trading range. We want to understand what was the environment before. We want to understand how it concluded. We want to understand how the initial change of character or resolution of that has happened, what kind of result we had, and then we're going to go through all of the swings one by one through the whole structure. We definitely also want to kind of have a look at the volume signature from the perspective of institutional presence, right? Where it happens, and then where maybe it's not happening, and maybe where it happens, more on the individual basis, and so on and so forth, and then how the price reacts to that. And that's another step. And obviously, a concluding step would be to think about the structure itself. So by that time, when you already have a feel for the structure, that's when you want to apply your structural layer with all of the labeling. Eric is saying, could you please repeat from right to left or left to right? I'm sorry, Eric. The Wyckoff story unfolds from from left to right, because we need context, and context always comes from the past. And remember that statement, judge the market by its own action. So all of the information on the bias, on timing, and on the potential character is already on this chart. Sometimes, and I think a lot about how markets are so much like the universe itself, kind of like this big space with a lot of events. And when we look into space, into the universe, all of the secrets are there and all of the answers are there. We just don't see them just because we are not capable of seeing them. We are not aware of, concepts, or we don't have the technology to see. Well, the chart, I kind of see the same way. It's a little bit of the analogy right here. Judging the market by its own action suggests an idea that everything is given on the chart for you to define those three elements: bias, timing, and character. So therefore, with that, do this homework regardless of the bias that we have defined as a group. Go through all of the swings, go through this whole analysis, and then next week we're going to go through this together. Remy is saying, one error in the past that has cost me more than any other error is not paying attention to context. the background. It's a problem of perception, at least in my case. And I would agree, Rami, and I would comment maybe from a different angle, but about the same thing. Let me explain really quickly and you'll see what I mean. I think our attention always is on the short-term picture. Unfortunately, that's how our minds work. And I think that maybe because our minds cannot comprehend a numerous flow of data, like we would be it would be too much. So I think I heard somewhere or in some articles that we could retain efficiently, on the with the very untrained brain, only 8 pieces of data, and that's in the good case. Well, obviously, you can develop this cognitive ability, but because we cannot perceive so much data at the same time, when we look at the chart, I think the emphasis goes to the latest portion of the chart. And if we would just analyze this, let's just kind of do this right now, guys. What do you think about this portion of the chart? Which definition of the bias would you give to this particular segment? Up, bullish, bullish, weak uptrend, long mini uptrend, phase C, sprint and test. Well, I was more talking about just kind of like what do you think the bias is here, Arvin? So yeah, we see a lot of the bullish characteristics, right? Um, this, there is some supply that's coming in, but let's say it's not as much as here, but we still have to assess this. If we don't have the information about this portion of the supply, then we can't really compare, right? We don't have information about this either, or this. So when we look in isolation, we probably would be thinking, wow, this still looks bullish. At this point, there is no other bias that I could think of. I mean, like I'm trying to figure out how to think of this in the more of the bearish bias, and I can't find anything except maybe some supplies coming in right here. And then without any references to the past, we can't really understand this supply that is coming in. Is this a damaging supply, or is it the supply that is being observed? There are some clues here. I'm not going to go into those because I want this to make interesting for us as a group for the next class. But that's the whole premise of when we look at the data and when I work with students, I think the emphasis first goes to the most recent price action. And then the whole context is kind of being disregarded. So I think, I would agree with Rami on that. All right, guys, let's jump into the next segment. Interesting discussion on the bias game, but it just took a little bit a long time. I'm going to go really quickly through this. For those of you who are in WMD, we'll talk about this. A higher low, that was great. Good call on the potential phase C test. This was a very interesting spot right here. I really love this bar because it was very challenging to trade through. It committed below the last bar that committed above. So you have two reversals here. Well, actually not two, but you have, so 1, 2, 3. You have 3 reversals in 1, 2, 3, 4, 5, and 5 days. So that's why it was a little bit of a difficult spot. Plus, obviously, this whole news catalyst situation that we're in, it could have been, as I said in the class, it was 50-50. Would they have much worse negotiation? It would go down. So it just even not kind of fair for us to make any type of prediction until we have a confirmation, which came in on this bar, and I was thinking that this is the time when we're gonna start breaking out, and we're still here. Why? Because again, news dictate the way how the structure unfolds. What's still nicely bullish is that the Russell is not having the same reaction. It starts to outperform, and that we could still reside here for quite some time. We could create this kind of like apex formation. And in some of the analogs that I've presented in WMD, there is a timeline into January where we could have that, apex formation, and then we're getting out of this formation. So we're waiting for the news. So that makes a lot of sense. Bitcoin attempt to rally, no lift until we see a more of the commitment above 9,000. There is no question that we're still probably going to go down. One of my targets is still somewhere 5,000, around that, 5,500. Oil, an interesting call right here that I made on Twitter. And it looks like the two next bars had better reaction than the previous two bars, and then the next bar reverses those bars. Not fully yet, but we are looking for the close above 55. That would be a commitment to the upside that we would be waiting for. Unfortunately, this market is also related to the decision on the tariffs. But we're seeing, and we've analyzed this. This is a very interesting reaction. It's a bullish reaction after supply came in here on the overthrow. And then look at how the price does not want to go down, does not want to go down, does not want to go down, does not want to go down. Upsloping structure. They're just waiting. That's why the trading range is developed this way. They're waiting. That's why the volume signature is so low. So if the resolution, which seems to be the momentum, is on the resolving the tariffs, at least part one of the negotiations, then we're going to have here a breakout. We're going to have like a bar of like 2 or 3% where we're going to jump up maybe like this, something like this, above maybe 56 into this area, into the high of these bars right here. So that would be a bullish sign of strength bar. We could trade it somewhere here early on that bar. That would be the best. And obviously just a failure below, I would say 52, something like this, where we have a sign of weakness and then a rally that goes nowhere, then there's going to be a continuation. But oil is very interesting right now. Gold, imagine if there is a resolution on the tariffs, what would the price of the indices do? Go up. And again, we're going to have this acceleration somewhere here on the breakout. What would gold do? Well, the gold would do this. We have a trade that is overpopulated with institutions right now. They're all in this gold trade. And because they are long-term institutions, they are going to go through the sign of strength and they're going to accumulate on the way up. And then they're going to hold on. But nobody's going to buy. And because nobody's buying, this structure creates, right? So no activity and the price slides down. So what's next? Capitulation by speculators, because long-term holders are not going to give up this position, but speculators don't want to go through a big structure. If the price is not traveling right away or after specific time that they would consider to be sufficient for the reaccumulation and where the price should resume its move to the upside, then they would get out, and that would produce that capitulation. The only thing that could still keep us in this structure short term right now is some kind of news or retest and then absorption, something like this. And if news, then something like that. But if market if the news are going to be positive and the market reacts to the upside, most likely capitulation, and we're probably going to go into this slightly above 1400 level. But this could present a very interesting long-term opportunity to buy gold again, and then just to wait for the long-term trend to resume. And VIX is just showing us that there is really no volatility to the downside yet. Nothing to be concerned about unless we are starting seeing some big bars like this. That would suggest that at least temporarily we could have something. Okay, great. Remy is saying, I found your recent PNF chart of crude oil published on Twitter very interesting and useful because it's contrary to the existing macroeconomic views, slowing world GDP growth. Yes, and Remy, I would agree with you. This is the big concern for me when I publish work like that. So what I'm doing is I'm just basically translating what I'm seeing on the chart and the way how I'm translating that into that analysis. And what I'm seeing is that there is some kind of anticipation on the news. So in a way, it's kind of a little bit of a gamble, right? What if it's bad news? Then definitely analysis will be considered erroneous. If it's great news, then it would be a good analysis. But in reality, the best trade here is most likely just to wait for the confirmation bar where we have some kind of resolution, something in a bar like this. Having said this, my bet on oil here is with kind of like the structure itself. The structure shows inability to commit below, and that's bullish. So that tells me that majority of the smart money is thinking that the resolution is going to be positive, and it makes a lot of sense to me as well. The next structure is upsloping, suggesting some kind of breakout and acceleration. So that also suggests that the views are more positive on the development. So in a way, structure dictates, kind of like this sentiment of the smart money as they anticipate but not participate. And we definitely could use this in the to our advantage. Dmitry is saying, can we talk about the idea of synchronicity of effort versus result in crude structure here? Absolutely. So where is that stop in action? We're probably going to see it somewhere here on a bar like this. This is the demand that is increasing. This is our red traffic light. Then we need to have like this confusion between the supply and demand. So somewhere here where everything just goes down. And then we have more demand coming in and price moves. So this is where price effort in the result is synced. Now, to which degree it's synced, it's a different thing. Because I could go back here and I could say, well, okay, here the price and the volume is synced and the effort is synced as well. But there is a much easier movement to the upside in this bar than, let's say, in this one right here. So therefore, we would be expecting less of the rally on the next bar, which we do have. And then I would probably also be just looking on the lookout for the bar that's going to have that expansion of the volume, and that's going to commit above 55. That would be a synchronization bar, and that would be also a breakout bar. It seems volume is going down, price is going up from Dmitry. So when we talk about synchronization, Dmitry, right? So I went through the bar by bar. You can also think about this for swing to swing, right? So for instance, yeah, probably not here. Okay, so let me just think about this for a sec. Something like here. This is a stopping demand right here on the way down. So this is our red light. Then going through phase B, we're going to have diminished volume characteristics. And then going into phase C, we're going to see again a stop in demand, and then that demand is going to start increasing that effort to the upside, and that's going to produce those bars that are going to travel. So this is something what we are expecting here in oil right now. Like this type of breakout, local breakout structure should happen on increasing volume signatures showing synchronization, and also suggesting that we're going to travel through this reaction. So that's the expectation. All right. Confusion of supply and demand. Would a doji candle provide this insight? Well, I was talking more about the confusion kind of like in a way of like being at this spot right here where we had the volume increase. In phase C, we have volume increase. And then in phase B, both demand and supply are exhausted. Supply is exhausted because it was pushing down, and there are no more sellers. And then demand is exhausted because it was absorbing, pushing up, and now it's exhausted. So therefore, going into phase B, we have a lot of situations, a lot of patterns in the volume signature where the volume goes down because all of the bets are made. And then people are just seeing how those bets are going to unfold, and then they're going to react, to price movements out of those areas. And then obviously synchronization, something like this. And you can find synchronization, either on the phase level, your phase D is going to be synchronized with the effort, or with the absorption, prior absorption, and so on and so forth. All right. Thank you for posting this chart and forcing me to think outside of the existing consensus based on macro views. Usually macro views are going to be on the completely opposite spectrum of the contrarian value composite operator. Composite operator is going to view unfavorable macro views for a commodity like this as a favorable time to acquire at the wholesale price the position of the size that they want. So therefore, as they come into the market at those prices, those depressed prices, and they start buying, we're going to start seeing this sequence of events that's going to unfold, that's going to show us emergence of the volume signature, and this is going to be our November special, by the way, guys. Again, something for your level, because we're going to go into such a deep understanding of momentum and volume. So volume is going to occur first. That's going to start to absorb the supply, and with that, synchronicity starts to occur as more demand comes in, and we're going to see momentum increase. And then we're going to see momentum change on different time frames, and that's going to start producing changes in the structure. So that's how it happens, there's sequential things. But the first thing, there should be a presence of somebody who is willing to step in and observe whatever is available for sale. And that intention, that stepping in and observing that supply, that's what starts the whole process.